Hello everyone, welcome to this video. I'm James and I'm going to go through some of the instruments that I'm busy trading. I want to remind you I've got a live stream later on today at 8:30 Eastern Time at Ola Prime TV. I'll put up a link below this video so that you can watch me a bit later on in the live. But for now, we're just going to quickly look through some of the instruments. I've got the Bitcoin, ETH and XRP charts up in here just to say that we're basically out of most of our ETH and XRP positions. And I've got about 70% of my Bitcoin positions still holding. I'm waiting for dips back down to the gradient line on ETH, back down to this white line, which is equivalent to the launch into the bull flag. And we've reached target now, so we've taken profit mostly. I've got one or two tiny positions remaining, but basically I'm looking for a dip back down to the moving averages, perhaps even right back down to the breakout point. Unlikely, but at least down to the gradient line. Similar sort of thing on XRP, almost identical. Although we've got some way to go still on XRP before we complete this bull flag. Targets are up here at these top green lines at about 420 and about 450. We're currently trading at 350, so we have some space to go up still. But I do think we need a pullback back down to the gradient line and the moving averages, pretty similar to Ethereum. And Bitcoin is the strongest of them all, even though it looked like it was flagging just a few hours ago. And we're basically holding within this triangle. Now, altcoin dominance seemed to have rushed in. And the alts are just sitting back a little bit now, waiting for Bitcoin to catch up. Looking very bullish. I have about 70% of my long position on, and my target, very similar to XRP and Ethereum, is up here at the top of the bull flag projection and the 100% Fibonacci extension. In other words, that distance there and the gradient is the same as this one here, starting at the bottom of the bull flag. Target $136,000, and we're sort of halfway along in this little triangle pattern that we pointed out earlier. And I'm still holding about 70%. I've hedged some of it at the orange line, the original breakout point. And if we were to dip back down there, we would have also closed the CME gap. Let me just show you what that looks like on the futures. So here's the Bitcoin futures chart over at the CME, and there's the little gap I'm talking about. Quite a big gap, actually. And that's the line I was showing you, the orange line on the other chart, the breakout level. It's also where the 20-period moving average is here on the CME futures chart, so an interesting level. And the 50 is also catching up. So here we are back on my black bull charts and holding within that triangle and looking pretty constructive, whereas the alts might need a little bit of a pullback. And I'll be looking to load up both XRP and Ethereum. I want to talk about natural gas. Some changes have occurred since we last spoke. If you remember, we've been short here at this double top, tweezer top at the apex of this rising wedge. We gapped down over the weekend, down below all the moving averages and the long-term bear flag. And this also puts into perspective, when we zoom out, the bigger term picture. It's possible that we have a head and shoulders, and also with a breakdown through that bear flag, means that we're probably heading down towards the big $3 major over-under level, big support level. And my suspicion is that we'll bounce off there sharply and rally potentially all the way back up to $4. If we should break and close beneath $3, that would be quite a momentous occasion. And we then would have the opportunity to form this head and shoulders to complete it. And if that should happen, the target is well below $3, down to $2.50 and probably below $2.50 into the $2.20 or $2.30 region. So if you're bullish on natural gas, be very careful. There's no problem with being bullish. I might be completely wrong, but if you are bullish on natural gas, just be careful and be aware that if you're going to be hedging or exiting your long trades, the $3 level is the key level. If we get there and we break and close beneath $3, we're probably heading much, much lower. Whilst we're on this page, we're still long on UEC. We have no positions on URA just yet, but we are long on UEC, and that's bumped up a bit after the pullback the other day. So a bit of a dip down yesterday, but bouncing off the order block bottom and holding up pretty well. And I'm still looking to rebuy URA into dips down to about $28 to $30, somewhere around there. Perhaps back down to the 200-period moving average and the 100, which are in confidence here, and a close of that gap. And that gap also has another corresponding gap to the left-hand side of it, so a pretty key level. Maybe we can get back down to 30 or 28, 29 in order to rebuy. And then on WTI, we remain short as well, looking for this to move down to this double bottom, which I pointed out in the last video. Go and check that out. And I did quite a long live stream as well, covering all of this in quite some detail. We just folded down beneath the 200-period moving average, where we got short at the top of WTI Moab. And we're now short, aiming for 55. That's where we got long on the last occasion, the only time that we've been long in the last few years. And we're looking for that level to reappear, and then a continuation much further down. Quickly looking at currencies, we've just got out of our pound long trade, so we've taken profit there at the 50-period moving average. And we might look to rebuy dips. I continue to think that there's another, I don't know, 300, 400, 500 pips in this rally as the dollar index drops down. And that should push up the euro, which had a good rally yesterday. We're not long on the euro. But we are short on the dollar yen, and I'm looking for this to move down into the 120s and probably lower, maybe down to about 115, something like that. We've got to get down through this level here, very crucially at 140, and I'm hoping that we'll be down there pretty soon, maybe in the next couple of weeks. Big move down, this yen carry trade unwind, I described it in yesterday's video as well. Have a look at that. And I think we could get a sudden sharp breakdown below 140, all the way down to like 130, and then below there into the 120s. So that's currencies. And on stocks, just to reiterate, we're now out of the NASDAQ, basically. We took profit at the top there, waiting to see what happens today. And we also hedged our S&P shorts a couple of days ago, and I've now unhedged those. After getting out of the long trade, we're now probably going to reverse if we hold beneath here. Looks like we're trying, but little spike up into that very, very important resistance level, into that over-under trend line and the 50% Fibonacci extension. We have one short position from down here, and I'm considering adding another one later on today. We'll see how we go. And then just finishing off, folks, we're still long on the dollar South Africa rand. We're long on TLT. That had a big bump up yesterday. Maybe the short squeeze is beginning, as I hope it will. And we have a falling wedge and all sorts of backstory to this in US Treasuries, of course. But just perhaps out of this falling wedge, we'll get a sharp short squeeze. I think we will. So we're holding on to that long position, even though I keep on threatening to get out of it. Target about 100, and then maybe even higher than that. And then on the VIX, we have no positions. Going quickly across the softs and grains, we remain long on sugar. I remain short on cocoa. You can see my position there, aiming for much, much lower, eventually on cocoa. Let me quickly zoom in and show you. Something like that. You can draw that on your charts, check that out, and put those levels onto your charts of your own. And we've also now just resold coffee a couple of days ago, and we're short again from the channel center line. I'm allowing for a move back up to the channel top, but it looks like right now we're heading down towards the bottom and not the top. So that short was good, and I'm looking for this sort of path to occur on coffee. And I'm looking for this sort of path on coffee, and once again, you can check those levels out on your own charts. We're also short on orange juice, not moving down much, just moving across the page, and we're long on cotton, corn, and wheat. Wheat had a bit of a sell-off yesterday, trying to bounce back up again now, as you can see. A little insipid and slightly lower than yesterday, but generally I think we'd be okay on wheat. Once again, we have a falling wedge pattern here, and once again, everyone's calling for this commodity supercycle to begin right now. I don't know if it's going to, maybe, but my targets are up here in the brown and the green. You can check those out on your own charts. Folks, have a great trading day. I'll see you live in the Ola Prime stream at 8:30 a.m. Eastern Time today, and I hope to see you there. And if you enjoyed this video, please like and subscribe, click the buttons below, and I'll see you in the next video. Take care.
I'm James the Hedgehog, sharp with the spread. Spikes on my back, Bloomberg in my head. Small frame, big brain, live on the floor. Running these charts like a four-legged lore. Delta neutral when I strut the ring. Arbitrage flex with a volatility swing. You panic in red, I sip tea in green. Wrist so tight, it squeaks on screen.
The hedge fund funk, he don't play no game. Sharp little creature in the capital lane. Market rolls over, he curls up tight, then pops out, swinging with the breakout bite. A hedge fund funk, spines on point.